I'm Jeff Moore, and in this video lesson, I'm going to be talking about the TTM squeeze, but more specifically, how to swing trade the smaller time frames using the TTM squeeze indicator. So if you trade the TTM squeeze and you want to learn how to trade the squeeze on smaller time frames, then this video lesson is going to be perfect for you. Talk about the TTM squeeze and the TTM squeeze probe, but let's break it down specifically. We're going to talk about what time frames are best to trade. 78-minute chart, a 39-minute chart. When do I trade them and why? For those of you that have been following me a while, you know that I focus on the daily, 79-minute, 39-minute, 195, but I've been getting a lot of emails about, hey Jeff, when do you drop it down into the 78-minute chart? Or when do you trade the 39-minute chart? One of the things that I want to first talk about is 70 to 80% of the stocks will follow the broad market. This chart that I'm looking at right now is the S&P 500. Now, for those of you who've been watching my videos, you know that I have this blue line, which is the 8 exponential moving average. This red line, the 21 exponential moving average, and the 34 exponential moving average. I'm not going to talk about the black, orange, or the green in this video. I'm going to focus on those because the discussion is, hey Jeff, again, I know you trade off the daily, but when do you drop it down? So over here to the right, I have the 78-minute chart and then the daily chart on the left. The first thing that I want to, make distinguish is whenever a stock is above this blue line, which is the 8 EMA, when a stock is above the blue line, that means it has strong bullish momentum. Yes, we can also look down here on the C wave and see, hey, the longer term momentum is up. But I can look at this chart very clear, see that a stock is above it or below it or right around it. Okay. Now this is going to tie me into when do I trade the 78-minute chart versus the 39-minute chart. So now let's go back to that diagram, and I'm still getting used to working with paint. So let's do this. Now, based on my discussion from previous videos, the 8 and the 34 are an easy way for me to have a bias on which direction I trade. What I mean is, when the 8 is above the 34, I'm only trading bullishly. I don't care what's going on, the 5-minute, the 10-minute, the 15-minute. That's not my thing, okay? I look at that 8 and that 34. When that 8 is above the 34 on the daily chart, bullish. End of story. Now, I'm going to switch this to green. So let's just say stock is going up. Again, that's going to stay green. Stay green. I'm making it higher highs, higher lows. All right. Higher highs, higher lows. Do that. Okay. So in this example, the stock is above the 8, which means it's super strong. Whenever a stock is above the 8, that is when I focus on smaller time frames. You guys know I trade the squeeze. And lots of times when a stock is above the 8 on the daily, you're not going to see a squeeze to trade. And so if it's above the 8, you might be waiting forever, right? Or at least weeks, months, I don't know. So that's when we can drop down into a smaller time frame. So the first thing that I do, and again, I'm going to go to the chart, but as soon as I go to the chart, this is going to erase. But that's okay. That's okay. So that's the first thing. I look at the daily. It's above the 8. My focus switches to shorter time frame. Okay? And I want you to go back in time for a minute where I'm drawing this. You see how it was above the 8, but it started to consolidate? date above the 8. So it went up, and then it started to consolidate around or above the 8. When I look at a chart, and I see that it starts to consolidate. Above the 8. Now, some of you, and again, I'm going to switch gears because I want to make sure you get this concept. Okay, let me go back. Now, you guys know that I like to trade also bull flags. Okay, a bull flag is a series of higher highs, higher lows, and it pulls back, right? So the actual definition is a higher high, 2 to 5 day pullback at or near support, making a higher low. That is a bull flag. Now, one of my mentors, it's funny because back then I wasn't trading the squeeze. I was focusing pretty much on bull flags. I remember he would tell me, okay, Jeff, stock is going strong, but instead of pulling back, it just kind of goes flat. He called that a bull. I don't know if it's a real terminology, but he called it a bull flat. Not a bull flag. He called it a bull flat, where basically it was so strong that it never even pulled back. Now, okay, again, this concept's going to go. So envision this 8. This 8 EMA. Lots of times when that bull flat happens on the 78-minute chart, not always, but usually there's a squeeze. So when a stock is above the 8 and it starts to do that bull flat, maybe 1, kind of 2, 3, 4, whatever, 5 candles sideways. So just envision that there's a bunch of candles here. They're not going to be in directly the same line, but that's when I love the 78-minute, and I buy calls on those. Why do I buy calls? I buy calls on those because it's above the 8. That means it's super strong. It was so strong it didn't even pull back. It just went flat. I love the 78-minute. So when I'm zoning through my watch list, I'm looking, where is the 8 above the 34? Is the stock above the 8? If it's above the 8, I'm focusing on the smaller time frame. Now, I haven't hit the 39-minute yet. I'll hit the 39-minute here in a second. But that's the 78-minute chart. Okay? That's when I look for the 78-minute chart. So just going kind of through some examples, let's just see really quickly, if I can find an example to talk about. Now I'm doing this live on the fly, but look, right off the bat, price is below the 8. So when price is below the 8, I don't even bother with the 78-minute. My focus stays on the daily. I'm looking for a squeeze setup to meet my guidelines on the daily. But when it's above the 8, like here, that's when I'm all over it. But just kind of going through this watch list, and I'm going to go through really fast. See, it's pull back to the 34. Like right here. Okay? Right here. Do you see? And I'll zoom in. Again, we're just doing this on the fly. But my point is, it went up. Now it's consolidating above the 8. So that's when I shift to the 78-minute. And again, it doesn't mean that I've got an entry signal. It just means that if I'm going to trade this, if my focus, because there ain't no squeeze. There was a black squeeze right here, but it didn't pull back into my buy zone. My buy zone is between the 8 and the 34, preferably around the 21. So if I'm going to trade this chart, and I'm not saying I'm going to, I need to trade a smaller time frame. And guys and gals, since the stock market is above the 8, like a torpedo, most stocks are above the 8. Now is the time to be focusing on smaller time frames. And if you're at work, or you don't have the luxury of maybe even being able to look at the charts 2 to 3 times a day, then just don't trade. It's okay not to trade. life will go on. Okay? But anyway, that's what I'm looking for in the 78 minutes. So as I'm just going through my watch list, I'm looking really quickly. Where, first of all, is the 8 above 34? Yes, great. I'm bullish. How's the C wave doing? Great. Are we in a squeeze? We're setting up in a squeeze, but it is the stock, it's below the 8. So when it's below the 8, my mind is focused on the daily time frame. That's just me. Okay? That's just me. I like to see those strong stocks. Now, if price goes, here's another thing. If price goes down, bounces back up, and it hovers above the 8, now projecting out in the future, that's also a good time for the 78-minute chart. Because look, it might come down to the 34. The key, first of all, is it above the 8? If it's above the 8, I'm shifting to smaller time frames. When it starts to consolidate 4 or 5 days above the 8, 78-minute chart usually set up a nice one, a nice squeeze. Again, I still follow the same guidelines though, right? Just like we talk about. Doesn't matter what time frame, it's the same rules. Above, okay, so again, it's the same rules. Is the 8 above the 34? Are we in a squeeze? Is the C wave above 0? Is price below the 8 but above the 34? Is it around the 21? Okay. Pro signal arrows, or the buy zone. How's the momentum on it? Same rules that I always talk about. But that's when I look at the 39-minute. So again, the key to me is how is it doing in relationship to the 8 moving average. So let's zone in for a minute. Again, we're doing this on the fly. We may not find one, but let me drop this to a 39-minute chart. Because again, it's on the 39. Understand this. It's above the 8, so I'm only trading bullishly. Now, this one right here is not quite an harami. Let me see if we can find one. We're just doing this on the fly, so this one is pulled up to a higher high. This is back, pull back. That's not kind of a good one, because you can see on the 39-minute chart it hasn't cooked yet. Let's see. Ready? We just looked at that one. That one, kind of, no. Again, just doing this on the fly, but let's just see if we can find a good one. Okay, here we go. C's. So SeaWorld, right? SeaWorld. I've y'all been to SeaWorld, but cool. Here we go. Check this out. Think about what I just said. And I just did this completely on the fly. So, remember what I said. It's above the 8. It went to a high. It barely, and again, I did not have this planned. It barely pulled back. One day. And look what's going on right now. We have a harami forming body inside body, or also known as an inside bar, right? Or some might call a little pennant, right? A pennant. So you can, if that's what you're used to, you can just say, oh, we got a little pennant. And then look at over here on the 39-minute chart. Boom. Squeeze. And again, I'm not saying I'm going to enter because I've got to follow the same guidelines, but I'm just pointing out the fact that on the 39-minute chart, there's a squeeze. Because I see this pennant harami forming. So when I'm going through my watch list, look at this. I got it zoomed in. I can go really quickly right around the 8. I know that the 78-minute chart is my game, but there's no setup yet. Nothing. Bet. Perfect example for me. Check this out. Got this harami, but look, it's below the 8. So over here, this is the 39-minute. If I go to the 79-minute, it's not part of my guidelines. Price is below the 34. That automatically disqualifies it. Yeah, it's a squeeze, but it disqualifies it because it's below that 8. I like it when it stays above the 8. Okay, and again, I've got it zoomed in quite a bit, and I'm doing this on the fly, so, here, maybe here. What do we got going on here? Microsoft. You ever heard of that tiny little company? Yeah. Went up. It's basically consolidating under the 8. If you look closely, and again, this is all on the fly. If you look closely, we've got this harami happening. This harami. This is the 78. So we noticed that it's above the 8. It's not even pulling back. It's basically forming that bull flat. But look at here, the 78-minute chart, there's no squeeze. So let's go look at the 39-minute to see if this little harami has formed a squeeze on the 39-minute. Nope, not yet. Okay, not yet. So we wait. But if I'm going to trade this, then I'm only going to do the 78-minute or the 39-minute. And I'm going through there. Going through there. Going through there. Look at this one. Facebook. I'm currently in Facebook. Full disclosure, not a recommendation to buy or sell, but Jeff, why are you in Facebook? Let me tell you why. See my little circle where I got into it. Because I didn't, the reason why this little circle is not on the candlestick, because I didn't enter on the daily chart. Jeff, why didn't you enter in the daily chart? Well, it's above the 8. There's no squeeze. But look at what happened. Look at what happened. Price went up, and boom, consolidation above the 8. 1 bar, 2 bar, 3, 4, 5, 6 bars. Ooh, what? Flat, as my mentor would say. Bam, look at that 78-minute chart right there. Look at that 78-minute chart. Zoom in so you can see how beautiful that is. Facebook. Come on, baby. Look at this. It is in a high compression squeeze. Even better. Right? Went from low compression, mid compression, to high compression, which means it started off wide, and it's getting tighter, tighter, and tighter. Uh-oh. This one, now we're getting an early in out signal that it's about to fire. And since it's a green bar, it's telling me that the red squeeze is about to fire. Since we have the black dot, it's telling me the orange is about to fire and the black is about to fire. So all systems go for launch. Okay? And look at this. Beautiful. Where did you get in, Jeff? Well, right here where I tell everybody. In the buy zone. Went up, formed a beautiful squeeze in the buy zone. So far, I'm not saying it's going to stay like that, but so far, looking good. And if this red or this orange fires to red, fires to black, and then that fires to green, this bad boy is systems go for launch. But my point is, for the purposes of this video lesson, is it's above the 8, consolidated sideways. When I see that, I know 78-minute chart is going to be my play. Oops, sorry about that. 78-minute chart is going to be my play. My play. Doesn't mean that it's in a squeeze, but there's a high probability that the squeeze is going to form. Which direction are you going to trade it? The direction of the trend. It works the same for bearish. If it's below the 8 to the downside, then what I'm going to do is I'm going to look for a consolidation so I can then jump in on a smaller time frame. If you'd like to learn more about trading options, I encourage you to check out my Options Elite Masterclass and all the bonuses that I'm giving away this month, like my TTM Squeeze course for free, plus that Forecast Pro indicator. I'm giving that away free this month to anybody who gets my Options Elite Masterclass. So check down below in the description if that interests you. Now, if you like the TTM Squeeze Pro indicator,